back for another fun-filled, action-packed, insightful. What is it we do, David? I don't know.
Episode, conversation, one-way
Episode.
dialogue. I'm not sure where, however you want to say it.
Well, considering I think our last episode, I'm not talking about the what transpired in the interim, about a few weeks ago, where I was unceremoniously dumped in favor of Emmy Takeda. She did a great job, by the way.
Yeah. Sometimes, Mark, you have to bring in the reliever to finish the game, but you're still the starting pitcher.
That's right. Getting old, some rotator cuff, Glad to be back. I'm in the West Coast. I'm out of the basement, and just shortly after the aftermath of Hillary. So, and the sun is out, everything's drying up. So
That's very good. You're staying off the streets.
Happy to be on the call. Yeah.
Well, we're glad you can make it, Mark.
So I think that we have an opportunity here to take what I understand is the culmination of a lot of insights from months of research, and then you've parlayed that into a new document that we're pleased to share with the audience. And my first question to you is, what's the headline? What's the takeaway? How are you pitching this?
All right. So a pithy, concise headline you want, a pithy headline you get. Headline reads, Mass has captured 6 percentage points of eGrocery sales share over the last 4 quarters. How's that?
6%. Incremental.
6 percentage points. 6
percentage
share points. They went from roughly 39% to nearly 45%. So 6 percentage points.
Got it. That should not come as a surprise of anyone who's been listening to us. So if mass sales are up, how does that look at the receiving level?
Well, first of all, I think to just step back, it isn't surprising that it's up. I think the magnitude by which it's jumped, in the second quarter of 2023 versus a year ago, is pretty impressive. It was almost 6 percentage points, like I said, but compare that to second quarter 2022 versus 2021, their share gains there were about 2 points. So we've seen a near tripling in the share that they've been able to gain. And there's a variety of reasons for that we can talk about today, Mark. That is, I think, an important context, because really this acceleration started around Q2 of 22. But to your question about, your question was around share of the different receiving methods, was it?
Correct.
All right, great. I'm glad I remembered that, because the question wasn't really very well structured. So, I'm only reading what you sent me. Oh, well, that's fine. Let the audience know how well prepared you are. When we look at something like pickup, mass can be characterized as just predominant there. They have a 60 share of the pickup segment in terms of share of sales, compared to supermarkets, which is just under a third. Delivery, if we're looking for a silver lining for supermarkets still are the dominant format, with about a little over 40% of sales share in delivery. But mass is hot on its heels, just a few points behind. And if we look at just the trend line from the prior 2 years that we're analyzing, it looks as though mass could be prepared to overtake supermarkets in a quarter or two. So that's kind of the headline and where we stand. And clearly, there are a variety of factors, like I said, that are driving these shifts for mass, and in some cases, the various formats or methods.
So before I ask you, what's the other key takeaway from this? Do you think this trend is irreversible?
That's almost like probably saying never say never. I don't think it's irreversible, but I question really lingers is how permanent or transitory, to use some Fed speak here, are the trends that we're seeing. I would say in the near term, in the next 1 to 2 years, some of these share gains could likely be held and maintained, if not expanded upon, just given, again, the confluence of issues that we're dealing with. But at the same time, that would assume that grocery isn't improving their performance, which would be a bad assumption to make. So assuming that the economic realities improve for the households in the next 2 years, then some of the pressures that have kind of created tailwinds for mass could shift back in favor of grocery as purchasing power returns to kind of normal levels.
And do you attribute this just to mass being better at executing?
No, I think when we look at this, there are two pieces, and the execution obviously is one part of it. And in that respect, mass is outperforming supermarkets relative to the likelihood to reuse the same service within the next month, and that's true overall or by method, pickup or delivery, and it's especially significant with pickup. But it's hard to determine whether that's purely based on how well those retailers executed, or simply the state of the financial strength of the households, right? So, I mean, if someone's still stretching a buck next month, they're going to be more likely to continue to do what they did this month, as opposed to someone who had a wonderful experience and then chose to use it again because of that experience. So it does complicate some of the things that we're looking at. So I don't want to give you or anyone else the impression it's one or the other, but rather it's a combination of the economic realities as well as some of the experiential ones that are both at play at this point.
So let's deconstruct mass for a bit. What's the split between the major players?
What's the split between Walmart and mass? So when we look at that, and you're going a little out of turn, Mark, here, so that is fine. But when we look at that, Walmart obviously is the dominant player overall, not a surprise, but they have roughly 36 share of eGrocery sales in total. Target is just under 7%. Now, the headline here would be both are growing their share, but Walmart's simply doing it at a much faster rate. And to kind of put that in context, if we looked at Walmart's share in Q2 22, it was 30%. So they've grown 5 to 6 percentage points on a year-over-year basis if we're comparing second quarter of 23 to second quarter of 22. Target had a 6 share in 22, so they've grown about a half a point. So you can see that Target is performing much more similar to a conventional supermarket as compared to Walmart when it comes to grocery. But we also need to keep in mind that grocery is an overall larger share of Walmart's total business as compared to Target. So customers do perceive the two outlets differently, but they're both growing. And I think it's a tribute to Target that they continue to see share gains in this environment when you realize that they typically are priced maybe 8-9% higher than Walmart, which is still lower than most conventional grocery stores or regional supermarkets. But Walmart also has been investing quite heavily, as you know, and both of them have very similar propositions in terms of their fee structure. It's just right now, if you're looking to buy a full basket of goods, which we've analyzed before many times, as you know, Mark, it's simply cheaper to get that basket of goods from Walmart. And like I said, it's about 8% less at Walmart compared to Target in that example.
So now we've talked about this before. So you're a regional grocer. Your biggest competitor is likely Walmart. Is there anything that you can do in the meantime? Is there anything you can do to fortify yourself in an environment where inflation is continuing to push higher income households down to shop at Walmart or other discounters?
I think kind of just make a loose comparison to, the seasonal flu or COVID, immunizations maybe don't prevent an infection, but they do minimize its impact. So, what's the the shot that regional grocers can take to immunize them from some of these external factors that are, for the most part, outside of their control.
Yeah.
We know that they practically cannot lower prices enough to keep those households there, especially the ones who are finding financial hardship, which is growing and significantly growing in certain subsegments. I think what they can focus on, and we do see this for the most part, is that a focus on helping customers save money when shopping with that particular banner, whether that's through digital deals, whether that's for various multi-purchase offers, whether that's through rewards discounts, or whether it's through providing ways to avoid certain cost by realigning the structure of some of the services. All of those can help reduce the pain. It's maybe not going to prevent it. And then obviously beyond those kind of tactical suggestions would be obviously still excelling at executing your strategy as well as you can in this environment. It's really hard if your volume is down to staff it accordingly, especially for pickup. But this is what's benefiting the likes of Walmart and Target is, they're getting more volume. That volume allows them to continue to staff up. That creates a virtuous cycle of providing even better customer service to those people who are engaging with them, especially for pickup. And this is why we see a significant gap, a much wider gap in the likelihood to use scores when it comes to comparing mass retailers to grocery for pickup as opposed to delivery, because the greatest differences that you can observe or feel are generally going to be tied to the ones that are connected to the pickup operation. Is the retailer generally is doing that last leg of the distribution to the pickup point.
Which, when I referenced this in my question, what share of households are buying groceries? What's the most valuable age group?
Well, we've said for some time the 30 to 44-year-old age group is the most valuable. It remains to be that way overall. Although we would say, looking at the last 3 years, we from 21 through 23 in terms of second quarter, what we can see is that group, as well as the younger one under 30, are both pulling back their spending online. And this may be indicative of some of the financial distress that those households are on, while at the same time, the older households, 45 plus, we've seen a bounce or a recovery where 23 is now an up year versus the prior, whereas last year was down versus 21. So we're still seeing the core proposition in terms of age groups stay steady. But what we are seeing is some adjustments, which could be reflective of some of the economic pains that we're seeing or sensing in the marketplace.
Very good. What's the one headline that you haven't shared that I should ask you about?
I think we were talking about the external factors. Mm-hmm. I think we've touched on that. I could add a little bit to that if you like.
Yeah, I love it. Yeah, please do.
Okay, if you're interested, Mark, I'll do that for you.
Well,
just this one
I'm asking.
time.
I'm asking on behalf of the audience.
Okay. Well, since we're talking about headlines and you're trying to get me to be a little more concise with you, we would say again, the economic and experiential factors are both playing a role in the share shifts that we're seeing. Obviously, those two are helping account for shifts to mass as well as shifts to pickup. In both cases, they're lower cost to use from the customer standpoint, right? From an acquisition of a basket of goods, it costs less to buy from Walmart. And when you look at services, pickup in particular, the general model that mass follows, Target and Walmart, for example, do not offer, or for the most part, do not charge a fee for pickup. Obviously, Walmart does have a fee for orders under a certain value, but the vast majority of orders should easily exceed that hurdle, as opposed to the grocer. But when we look at this, it's worth noting that inflation was raging in 21 and really peaked overall in the second quarter of 2022. And I point that out because it was during the second quarter that we started to see the separation in share between mass and grocery. Now, food inflation peaked in quarter three of 2022 at north of 12%. And what we've seen is obviously it's softened, it's abated, but the cumulative effect is still really compressing purchasing power. So I took the time to do a little homework on the side. Maybe it's like bonus grades. And I looked back and calculated a 4-year average for purchasing power from 2017 to 2020. And the average per year was that our purchasing power was declining maybe about 1.7% a year, on an average basis. In 21, our purchasing power dropped over 5%. Wow. In 22, our purchasing power dropped by over 8%. And in 23 through June, it's dropped 3%. So you can see that while our purchasing power is rebounding, even at nearly 3% in 2023, we're still nearly twice as high as, the 4-year average just prior to COVID.
So did you map that in relation to the split between grocery and mass?
Well, I call that out because when we look at when mass started to accelerate its share gains, it occurred just around the second quarter of 2022. And then it continued to expand. And so as we were looking at that, the question is, well, what can we attribute that to, right? It's, there are various factors, but the price gaps are relatively fixed when you think about, measuring the price gap of Walmart versus Target or someone else. They don't move that much. But the cumulative effect was just becoming very acute in the third quarter. So when we look at the purchasing power, this is based on the overall price inflation, not just for food. But, again, when you have headline inflation at, nearly 9%, that spooks people. When people come out of a grocery store and find a bill that's, $20 more than what they used to pay, people start noticing it, right?
Yeah.
So they start to become more sensitive to that. And if you were to buy this comparable basket of 40 items at a conventional grocer versus Walmart, you could be spending $20 more on that order at the regional grocers. I mean, that's just the reality. So, but at the same time, let's remember, not everyone is going to shop at Walmart. If they have to, they will. They could also shop at somewhere like Aldi. So we had that. And, when we looked at that, what else also impacts the purchasing power is the expiration of all these COVID-related fiscal supports. I mean, I'm looking down now, we had in the fourth quarter of 21, the expiration of the fourth tranche of economic impact payments that was primarily geared to help households with children under 18. It was a monthly amount between $250 and $300 for households with kids that qualified, and that was paid out from July through December of 21. And then in third quarter of 22, we had the resumption or the unfreezing of some of the grocery sales tax in the U.S. And there's 13 states that charge a grocery tax. Illinois and my state, so it's 1%, right?
So, and I guess, if you were representing regional grocers, and this is like a perfect storm of, as you said, external factors. You have the economic environment, you have the public policy environment, you have the fact that the mass merchants were out in front, especially on pickup, long before the regionals. So it's like a perfect storm for a lot of the regionals when it comes to online.
And so the other thing is, right now, first quarter of 2023, we had the expiration of the SNAP emergency allotment, right? Which on average was $95 per household per month. But for households with kids, it could have been north of $200 a month per household. And so one thing we looked at was using government data. We saw an increased use of credit cards. So overall, it was a 4-point gain year over year in households saying that they're leaving more balance on their credit cards. For SNAP households, it raised 15 points. So 4x over that. If we looked into the percentage of households that dipped into savings, that rose year over year about 1.5 percentage points. But for SNAP households, it raised 10 points. So you can see people are now going to the other places where they can tap into money, right? In the credit market, in terms of the credit card, or into their savings. And we've already seen plenty of public reports that all the surplus savings from COVID has been, exhausted by now. So, people are looking at, where do I find this money? And when we think about this return to office, and you know this firsthand, Mark, working at home as opposed to working in office means you don't have all the commuting expenses. So for those people who are now doing that, they have the commuting expenses. But if you have kids under 18, you may have childcare expenses that you now need to pay for, which is very expensive. And then, again, not to be Debbie Downer, but coming around September, October, we're going to start to feel the effects of the restarting of the college loan payment program, which affects, nearly 40 plus million households or individuals in the U.S. So we're going to continue to see purchasing power be reduced because of all these expenses that weren't expenses for the last 2 to 3 years.
So David, I know we could talk another 20, 30, 40 minutes on this or more. So I want to thank you for your time. And as always, happy to distribute the report to those who follow us. It's our pleasure to continue to bring these insights to the industry and grocery retailers generally. Before I let you go, David, I have to ask you, what are your thoughts on Aldi's announcement last week?
All these announcements last week, for the people who are watching this, were being recorded third week of August. You're referring to the announcement of acquisitions, potential. Correct. Well, I think it came as a general surprise to everyone about, for instance, Aldi's announcement. Given, where their business model lies, it remains to be seen how they will integrate and how those banners that they acquire will continue to operate, into the future. One thing is clear: Aldi is in a space, that's only shared with Walmart right now, relative to where you can get the lowest price. And Aldi has really driven Walmart to be more aggressive with their pricing, because it wasn't too long ago that Aldi actually owned the low price. Now they share the low price with Walmart. The difference is Walmart just has much better or much stronger reach and penetration into households due to, its format. So it could be a start of something new for a very different purpose that we are just all beginning to get our minds around.
Well said. Well said. Diplomatic as ever. So
Yeah.
That's it for this week, this month. I hope to be back next month. I don't know.
Well, you could have always done the Jim Cantori Weather Channel view from outside, in the gale wind forces, in the rain, fighting the elements, and we could have had this chat. But I know that's probably not. We're not the Weather Channel.
No.
We're the Insights Channel.
That's right. Insights Channel. I like that.
Okay.
All right.
Don't try to trademark that.
No, I'm going to go get the website right now. Okay.
There you go.
All right, David, thank you as always. Appreciate it.
My pleasure. Thank you.